Hi everyone, this is Richard, CEO of altFINS. In this video, I'm going to briefly explain the latest FUD, or fear, uncertainty, and doubt that's crept into crypto and caused a pullback during the last week. I'll also explain why I'm not overly concerned and why this is not an FTX-like event, but rather a small bump in the new bull cycle. I emphasize that this is not financial advice, just my own opinion. The reason for the FUD is the ailing Silvergate Bank. Silvergate Bank is a California, US-based bank that has focused on crypto-related banking services. Many exchanges and institutions use Silvergate for on and off ramp of fiat currency into cryptocurrency. So Silvergate is one of the few US-based banks offering crypto banking services, and in fact, most stablecoin issuers like Circle, Tether, Paxos, Gemini, held at least a portion of their reserve deposits at Silvergate. Now, Silvergate is a publicly traded company actually, and had recently failed to file their year-end financial statements, 10K, with the regulators. And that sparked fears that there is trouble brewing. The bank stated that it may not be sufficiently capitalized, which in translation means the bank could be insolvent. In other words, it has borrowed more than it has in assets. Additionally, the bank also warned that it is assessing, quote, its ability to continue as a going concern, unquote. Now, Silvergate is still probably a fallout from the FTX bankruptcy because Silvergate reportedly had $1 billion deposited with FTX, which obviously isn't available anymore. And furthermore, these concerns recently have resulted in a big bank run, essentially, as many Silvergate institutional clients have pulled money out and distanced themselves, including Coinbase, Crypto.com, Bitstamp, Gemini, Circle, which is the issuer of USDC stablecoin, Galaxy Digital, and also Tether issuer has stated that there is no exposure anymore, that they have all pulled out their deposits and discontinued working with Silvergate. Now, obviously that really just accelerates the downfall of Silvergate, and in fact their deposits with a lot of their clients have plunged from 12 billion to just mere 4 billion just within one quarter. And they had a huge loss last quarter in the fourth quarter of 2022 of about $1 billion. So on one hand, obviously these institutional clients that are distancing themselves with Silvergate are really just a death nail for the bank. On the other hand, it also limits the potential fallout from a potential bankruptcy of Silvergate. The Silvergate's issues have sparked fears that it could be insolvent, and that could again lead to some sort of a fallout similar to FTX bankruptcy, which impacted many institutional funds that lost money, and some were forced to sell their existing crypto assets to cover their losses. Here is why I'm not concerned, and I think that this is just a bump along the renewed bull cycle. Like I mentioned, a lot of the major players have distanced themselves already, limiting exposure and potential spillover. Secondly, Silvergate only had about $4 billion in deposits left, and probably even less so now, which is far less than the FTX exposure was. Silvergate also is a bank and has some backing from the federal banking agencies, including FDIC, the Federal Deposit Insurance Corporation, which insures customers' deposits up to $250,000 in fiat, although that doesn't necessarily cover digital securities. Also, I will point out that stock markets were up last week by about 2%, and crypto was down. Let's take a look. So this right here is actually a chart of Silvergate's stock price, and it's plunged from a year ago of about, call it $160 to now just about $5 or $6. So it's basically down 97%. But let's take a look at let's take a look at the performance of the cryptocurrencies in the last week. As I mentioned, while stock markets like NASDAQ, the technology index, was up 2%, crypto was down. Bitcoin was about minus 3.6%. Ethereum was down last week about 2.4%. So not a major pullback, although in the last day or so, the pullback was sharp, but it basically erased some of the gains earlier in the week. And the pullback for some of the other altcoins was certainly higher than that for Ethereum and Bitcoin. But we're still well in double-digit gains for year to date. So there's definitely been some profit taking recently, but we're still clearly in an uptrend. If we look at the trend ratings here on the short-term, medium, and the long-term basis, clearly on the medium and long-term basis, Bitcoin and Ethereum are still in an uptrend. In fact, most of the altcoins are in an uptrend. And if we look at the charts, Ethereum simply has pulled back. It was rejected at 1700. Let's look at the bigger picture. Was rejected at 1700 or 1750 a couple of times. Now it's pulled back, but it's still well above the 200-day moving average. The next support area is about $1,500. We're getting close to that now at 1566. So that certainly a support area to keep an eye on. And I would say even the 200-day moving average, which is around the $1,400 level, is a support area. So as long as the price is above the 200-day moving average, I'm comfortable saying that this Ethereum is still in an uptrend, and we're seeing sort of higher highs and higher lows thus far, which is also characteristic of an uptrend. Bitcoin similarly, was rejected at 25,000. Now it's pulling back, could pull back all the way to 20,000 and still be technically in an uptrend. That's also coincides with the 200-day moving average. So as long as we're above that level, we're still very much in a new uptrend. So that's another reason why I think that this is just a bump in the road, on the road. And overall, I'd say that the big picture driver for the valuations of risk assets is inflation and therefore interest rates. And I do believe that inflation peaked last year and it has been declining steadily. And as long as that narrative continues this year, that will give the central banks a reason to slow or pause their interest rate increases. And that really was the primary reason behind the devaluation of crypto and stocks last year, is the rising interest rates. The pace of these rate increases will be slowing this year and even pausing, in my opinion, which will continue to provide some tailwinds and positive tailwinds for the valuations of risky assets, again, crypto and stocks alike. As a reminder, we publish a weekly research report on the macro outlook. And so I suggest that you take a look at that under the Research Hub, reports that are labeled Crypto Market Overview, Macro. These are weekly reports in which we highlight some of the major data points and also upcoming data releases. But here we highlight the US CPI, or Consumer Price Index, in other words, inflation. As I mentioned, it appears to have peaked in July of last year and has been easing. Still not where we would like to have it at 2 or 3%, but it's been easing and declining, which is positive. As you can see, the interest rates, the Fed raised interest rates last year and this year at a very rapid pace. Now we're close to about 5%, and I think that they will take a pause here shortly, and we will have another 1 or 2 increases in interest rates. But after that, I think they will pause, which will be bullish for the risk assets like crypto and stocks as well.